Hi and welcome to TCM Education. This morning we're starting again with our power list. Let me explain and take 2 minutes out of this video for again explaining the prerequisites to enter this list. What are the parameters that we want and why? First of all, we want volume. That's clear. Anyone that day traded knows that volume is super important, and even more than volume is super important, the increased volume is also super important. But just to make things simple, we decided to take the 5 million threshold. So any stock that is on this list must have at least 5 million shares traded during the trading day. It's possible that it's going to enter the list in the last minute when the threshold is going to be 5 million. So that's possible. Anything is possible. Then we want the price range to be over 10. And there's always a caveat, because sometimes the stock starts trading at 850, and by the time that we see it move over 10, it's up 20%. Most likely we missed on the move. But there are enough stocks in the New York Stock Exchange and NASDAQ that can fill this list, and they are above $10. And now let's move into the third and most important screener or parameter, which is actually a screener in this power list, which is the intraday range. And we want the intraday range to be 10%, which is a very tough barrier. And that means that if a stock's price is $100, the range from the highs to the lows will be $10 or more. That's a lot. Normally a stock will move 1 to 2% on a given day. The S&P can actually move from time to time 0.5%. And if the S&P moves 2%, that's a lot. That's $12. 3% is $18. So that hardly ever happens. It happens, but hardly. But that's the S&P 500, and here we're talking about individual stocks. So this list here carries liquidity, a lot of power, because in order to reach this range, 10% range threshold, you need a lot of volume and a lot of price action, and the motivation for buyers to keep buying or keep selling and buying and selling. So the volatility is tremendous. That's what we want. We don't want to look at stocks that are not moving. And obviously there is a lot of momentum here. Most of those stocks are either following an IPO, following news, good or bad, and the turnover in this list is not very high. Okay, so if we look at this list this week, CRCL was with us almost on a daily basis, but that's not a surprise. CRCL is a prime candidate. SMR was yesterday and is today. Oklo was Monday and today. CRWV was last week, and BIS was last week. QUBT was this week. Tempus AI, that's TEM, it was on the list, I don't remember when. HIMS was on the list last week. Pony was on the list this week. SBET, welcome back to the list. This one was never in the list. Chime Financial, I don't remember that it was in the list, maybe it was. And the rest weren't, but NKTR was the prime component of the list yesterday, and AVAV, I don't remember it ever being on the list. So yesterday we had like 13 matches, today 18. Now let's move and go with the flow, meaning go with the NKTR, which was a great mover yesterday. Remember, it moved like 150%, and today it moved over another 19%. And the intraday range was 57%. That's a huge number. That talks about a lot of volatility, and that's why it's a prime culprit for us. Okay, so NKTR range percentage is 57%, and you'll see why immediately. What does it mean? The distance between the highs and the lows, the volume 26 million shares. I don't remember how much it traded yesterday, but way above our 5 million threshold. So okay, let's take a look and see what the analysis of this stock is or was. First of all, let's start with the daily chart. If you remember, guys, the stock was 70 cents more than 2 weeks ago. Then they did a reverse split of 15 to 1, so the stock came from 70 times 15, that's like $10. And then the news came out of a new drug. Okay, this is a biotech stock, obviously. NKTR Therapeutics should tell you immediately that this is a biotech stock, and now it's volatility, pure volatility. Keep in mind that the stock lost 15 times 15 its liquidity. So making 15 shares into one share really plays into the liquidity, and that plays into the volatility. Which you have less liquidity, you have obviously increased volatility. So let's take a look at the intraday chart and see what happened basically yesterday. Okay, not going to talk about the prior day because we are day traders and we close positions at the end of the trading day. Sometimes it hurts to watch, but that's the reality. Unless you want to spend 2 hours analyzing a chart, and again, that's your prerogative to take small positions or large position overnight. But in terms of analyzing, it gets so complicated and very, very tough. Also, if you're not in a position or didn't watch the prior day, you lose interest basically. So now let's start from the beginning. So what happened yesterday, June 25? As you can see, the stock started with actually we had a sell-off into the close Tuesday. So Wednesday the stock started with a huge high run up, moved over 25 and ended up trading $10. Now, believe it or not, $10 on a $20 stock, that's 33%. And that's what happened in NKTR. Late investors, FOMO, I don't know who piled in and bought this leg higher. I don't think it was driven by short sellers, but I may be wrong. If we have time, we're going to look at shareholders and maybe see if there are, who are the shareholders. If I remember it right, there are plenty of institutional traders involved in this stock, which is a big positive. Okay, so the stock moves higher. Now, as always, we assume no trade in the first half an hour or 15 minutes because, again, you need to be razor sharp focused, enter most likely a round number, take a lot of risk, and our policy is to look at trades with 1%, 2%, see an entry point and find a stop loss. When you enter in the first minutes, maybe you can see an entry point, but there are no technical stop losses other than the highs and the lows of the day. Now, those are multiple points in terms of percentage, and we're not going to discuss them. Those are advanced type of trades that if you know what you're doing, you don't need to be looking at this video at all. So if you know how to trade in the first minutes and you're successful with that, maybe you can close the trading day after 15 minutes or 20 minutes, which many people attempt to do. I just think that this is super risky and at times costly strategy. It can work though. If you know exactly what you're doing, it can work. So that's the initial move. Now let me add the view up. So this is how the stock looks. Now let's see if we can analyze out of this crazy $10 move which tops at nearly 35 and a pullback of $7, which is like 35 minus 7, that's 20 to 25% pullback on this. You know what, let's draw Fibonacci and see if it can help us in any way. I don't use Fibonacci, but this is interesting. Hold on a second. Okay, I see something here. Obviously there are so many Fibonacci lines, eventually you're going to see something, but this 50% Fibonacci from 24 to 34, 3480, the 50% Fibonacci is where basically the stop, the support level came into play. Now let's say we're going with this approach because we don't have any other. We cannot use the VWAP, round numbers, it's not very clear. What are the stop losses? Not very clear. The Fibonacci is not, it can work from time to time. I'm not arguing with those who feel comfortable trading the Fibonacci, but Fibonacci is a one-sided trick. I mean, it's either showing you the support or the resistance, but you're not gonna tell me that most of us or most of those who use Fibonacci will use the 61% as an entry and the 50% Fibonacci as support, or the other way around. Okay, because those are very inaccurate entries. They sometimes are not even tested. They are not necessarily round numbers, so they are, you know, random, mainly random numbers that work from time to time. Now if you see a convergence of a round number, a Fibonacci number, and the VWAP, maybe you have something here. Here I see clearly that the 50% Fibonacci is a support level. Now let's say you see it in time and you act. Okay, so you think that this is the support level, and in this case it works like a charm. So 2940 or 2950, sorry, in this case it's 2940, and the question is, where is your entry point? Is it 2950, 2960, 3070? Where is the entry? And this is not something that the Fibonacci will tell you. This is something that you need to decipher yourself. Keep in mind that you're trading a wild mover that basically can move up and down $2 to $3 in a couple of minutes. So looking back at this chart, it's hard to decipher good entry points. Definitely in the morning session, clearly the support level here at 2940 is a good support level. So if you enter, for example, at the VWAP, which is 30, you have a 50 cent to 60 cent risk on this trade. That's an amazing entry. Again, having said that, it's a tough entry because the stock is so volatile, and you need to act. You have a very short time frame to act. You have a spready stock, anywhere between 10 and 20, maybe 30 cents of spreads on top of the stop loss. So that makes the trade a little bit more riskier. However, again, when looking at the risk reward here, and the move from 29 to highs of the day 37, that's $7, which basically dissolves very, very fast. So you need to act on this move if you are in the trade. If not, I cannot say that I see any additional entry points until the end of the trading day. So basically the story ended very early. Okay guys, I hope it was illuminating. Please share this video if you like it with your friends, and we'll see you in our next video.